Hello, Forex fortune hunters. Tom Wilmot. It's been a while, but I wanted to say I couldn't resist commenting a little bit on the Euro-USD move overnight. And in the midst of all the banking volatility and the meltdown in Credit Suisse and the meltdown of the Silicon Valley Bank, which goes all the way back to the dot-com boom of the 1990s. So in this video, I'd like to review the current Blaster 23 template I've been using. I haven't had much to add to that because it's been working so great. I'd like to share it with you again and go over a few other items as we think about the volatility in the Forex market and the stock market as we move into the middle part of March 2023. Hang on to your hat. We'll get started in just a minute. Okay, friends, let's back this chart up. This is Euro-USD 15 minutes. I'm recording this on the 15th of March, 2023. And as I mentioned in the intro, we've had lots of volatility related to the banking area and, of course, Fed policy over the last 3 days into late last week with the takeover of Silicon Valley Bank last Friday. Now, if we back this up a bit, we'll see that we get a little bit more up and down motion in our chart than we had with this enormous, nearly 200 pip fall off in the euro overnight. And let's take a look at some of the background issues. First of all, the Fed was scheduled to have its meeting, whether they would have another 25 or 50 basis point move in the Fed funds rate. That was scheduled for next Monday and Tuesday with an announcement next Wednesday. And the European Central Bank, the ECB, scheduled to do their half-point rate increase actually tomorrow, Thursday of this week. And all of those have been kind of baked into the Forex currency valuations going into the early part of this week. So as a result, as things began to heat up yesterday, Tuesday, we saw some volatility here with some of the CPI information coming out in the States. And obviously going into this area here, we had some decent moves up and down over the period of Monday. This was our big move up on Friday and so forth, as it was assumed that only the U.S. Fed would have to react to the banking crisis. And then, of course, what happened overnight was that Credit Suisse was told by their Saudi backer that, sorry, Charlie, no more funds for you. So as a result, we had this dramatic sell-off in the overnight period, all the way from $1.07 per euro in dollars down to 105.4 now, but falling off even more. So as a result of that, I'd just like to share what kinds of entries and exits you could assume with this particular template that I'm using called Blaster 23. It's an amalgam of all the things we've talked about in our many videos together over the last 3 years. But I just renamed it last fall, so just to make things simpler. Let's begin by once again going back here, and we can take a look and see that there are 4 or 5 longer-term moving averages. I used my Wilmot moving average cross indicator to plot this, and basically it's 25, 30, 35, 40, 45 are my moving averages on longer term. In the 15-minute chart, it runs across all the time frames, of course, but we're using the 15-minute right here. And basically the situation is that we have gold medallion when we're headed higher. That's a crossover of these 25 and 45 here. And then down, you can see this was the down move that we had in this environment here. And so bottom line is, if you want to check this out over a longer period of time, you can just see whether you get the kinds of moves you're looking for in normal trading days with by just checking out to see if you get a downward trend after the red medallion. Now, to complicate things further in this particular template, I also have put in a white and azure blue kind of medallion, and that's just for a shorter kind of crossover. I think I use a 6 and 12 EMA. Let's just review how we get rid of things or edit them by getting rid of that extra one here. We right-click anywhere on the screen. We move to Indicators, and I have to bring it over from my other monitor. If we come back up here, this one, Wilmot Mass Cross, it can be edited, and here we have it here with aqua and white smoke. You can see those are the colors. The inputs here are 6 and 12, as I mentioned, and we can delete it right here on the screen so that that'll just get rid of it and make it less confusing perhaps. We have this up move here, a pull back into the bands, and you can see here that the volatility that followed whatever the producer price index, whatever the fundamental announcement was yesterday, was the thing that we, or Monday perhaps, the thing that we had to watch out for. Now, just as a quick review also, I would suggest to you that around the fundamental announcements, you want to be very careful about trading, not get involved until you see how things settle out. And you can see that you had a pretty nice move here later on in the day that was easier to judge than this huge amount of volatility that followed the announcement. Now, you could drop down if you want to. If we can put this particular line in place just to see where we are, if we drop down to a 5-minute chart and go to the line, we can see that we have this volatility here coming down and then back around this way. So if you want to play for a slightly smaller amount of pips, you could play this kind of a trend right here, which is good for 20 pips. And on the euro, with a pip and a half or a pip 0.8 as your spread, you're really in pretty good shape with a decent amount of profit. You don't have to be involved in this. You could, in fact, of course, drop down to a 1-minute chart if you wanted to. Let's see if it will go back far enough on Forex.com to do that. Here we go. This is a 1-minute chart. You can see the volatility starts here. You can see here we have an uptick. We turn back around. This one is another one that you could play on the 1-minute side over here. And then over here, we just get into chop at the end of the day. So let's go back to our 15-minute chart now, and let's review some of the other indicators that we have here. First of all, I'll come down to our RSI, where we put our 45, 55 bands in place. You can see that we come up into this area here, but we can't penetrate, we can't go higher, even though we have breached the longer-term multiple moving averages. Sometimes what I like to do on this, by the way, is if you take your potential stop loss, and let's make that a little bigger actually. We'll go here and see if we can make that a little bigger. We're going to bring it in. We have this horizontal line. Let's edit it, and let's try to make it, let's see what we've got going on here. We want parameters, we want common, and we'll make this a little bigger so you can see it more clearly. Okay, here's our line. If you put here, you can see that if you put your stop loss, just testing, just a little bit above the medallion or potentially a little bit below the medallion. Now, this is a fundamental announcement, so it doesn't really work very well here. That's why I say be cautious, stay out perhaps. But you can see that even this pullback above the bands here on the downward track before the fundamental announcement came out as a normal market, that doesn't really breach your stop loss line. Let's back up and see how that works over here. We'll click twice on it to try to make it live, and then we'll bring it down here. If you put this into this area, you can see your stop loss could come here in the area of the bands. Also, you could use this additional indicator, and I'll talk about that in just a second. But we have this here. Let's see if I've got to go back and grab this and bring it down. If we look here, you can see that even when we come down below the moving averages, if we have our stop loss in this area, and obviously when we keep going up, we don't necessarily want to breach this level here, so higher highs and higher lows. So that's the situation. So notice here as we move our stop loss along, that's a way to be protected in the natural motion of the market. Okay, so now let's see, we've got our 15-minute chart on. We'll delete this by right-clicking and then deleting that object. Now we'll move to here. Notice that we also have the MACD, and the MACD we can move here. You can see that the zero line is in place, and once we take off like this, you can see our white MACD markers tell us we have an improvement until we get to a red marker, which says maybe we've got a rollover and a continuation to the downside, as we did in this area here. Notice also that our indicators kind of go all together at the same time. They match. So we've moved into the positive area here on the MACD. We have moved into the positive area here on our RSI, and that's in line with this move here on this particular chart. Now let's open it up a bit so we can see it more clearly. Here's that one candle. Let's put our line in place right after that candle. You can see that we have a pullback. Now it didn't get all the way to the bands, but if you were to drop down a little bit here, once you see that big motion, you can see here it follows very nicely on the trend magic as it moves higher. This was our big move here. We wait for a little pullback. You don't have to enter instantly on the crossover, but now that you know on a 5-minute chart that you have a 15-minute upward move as well as the 5-minute, you can see you're running above the 55 line here. You're mostly whites, except when you pull back in this area here. So these are to be watched carefully, but as long as you don't breach the trend magic line, you're good to go. You can see that that traces and changes to red at this area. So even though we haven't had our rollover, we have had at this point, up here is our rollover, we have had a breach of that trend magic line. We've begun to drop down here so that you can see it's safer. Now we're moving into the end of the day, so that's no good for us right here. It's not much motion to trade at that point. But here's the situation where we know we're probably going to be able to put our line in place and be safe here, at least into the close of the day. Now, what happened was that the volatility continued, and what we ended up with was a move here on the 13th of March, which was Monday. We had a big move up over the weekend after people had had a chance to digest the Silicon Bank news, and as a result, we had that real pop on Monday morning, Sunday evening actually, and into the Asian session, until we moved down here and just pulled back gradually into that same space. Notice that this kind of a pivot still works out quite well for us. And here, as we move along, let me get rid of that line for you now. Once again, we have our RSI moving up higher. We have a crossover of the zero line and into the white space here above the line here with this move. So we have on the 5-minute chart a potential pullback, slight pullback, and a move higher, which is 29 pips, which under normal circumstances for the euro is a pretty decent move. Okay, now let's talk trend magic. This is another one of the custom indicators that I put into my Dropbox file so that you could add it to your templates if you'd like to. And once again, if you check out in the notes below this video, I'll try to put a link to the place where if you have not yet signed up for free indicators, Metatrader indicators, you'll be able to do that by sending a note to me over on the website, and I'll give you an invitation to Dropbox so that you could load all of these for yourself. Now, the last thing that I wanted to mention to you was that also one of the helpful ones that I've used over the period of time and had programmed was an indicator called session times, and I'm going to go here to Navigator, where we're going to be able to find it down here in session times. It's not yet on this particular template, but we can add it in easily enough. Here's session times, this indicator right here, which I've already taken from my Dropbox file and installed here on my Metatrader 4 platform. And by the way, Metatrader 5 indicators are backward compatible. The 4 is backward compatible with 5, so not to worry there. We'll take this and we'll bring it over and add it in. Now what I've done with this one is given you some time frames that you can adjust. For me, and my Forex.com server is 7 hours ahead of me. So if I want to see the London Open, I'm going to make that be at 10 on the server clock. And then I'm 7 behind that, so that's 3 a.m. for me in the morning on the East Coast of the U.S. You may have to make your adjustments accordingly. Here is 1400. That's when I predict usually that the U.S. Open is. The 1630 is the stock market. I used to have 20, which would be an afternoon after lunchtime to get out of the market in the U.S. But I also have found that about an hour before the London opens at 9 a.m. in Forex server time frames, I'm going to change this one and make it red. And basically this is what I would say some additional activity in the European session, which is over on the continent. So basically their open would be at 9 as opposed to London at 10. Back in the early days, of course, before the euro, when there were so many of the currencies to be traded, that's why England became kind of the capital of Forex. But now there's much more going on in Frankfurt and other places on the continent related to these moves. And so sometimes you'll find that 9 o'clock is a great hour to start watching Europe if you want to stay up that late and you're in the U.S. Okay, so we'll say okay, and you can see here's our London Open. This is our new 9 a.m. line, and over here is 7 o'clock, and you can see that sometimes, especially after the market opens, you have the kinds of moves that you'd be looking for that are indicative of the local buying audience. Okay, let's wrap it up there for now. Good luck with your trading. You can see over here as we moved into today's time frame, let's go all the way to the end. Let's leave it just here. Notice that we did have this nice move that followed on the 5-minute chart all the time since the 3 a.m. open into the 7 o'clock hour. Even if you were just up on the East Coast at 7, or if you're staying up late in the West Coast, you'd be in a position to take advantage of something like this, which was a 44-pip move just in that one kind of downward thrust. We came back. We didn't really challenge this line very hard at all, and even if we put our stop loss back up here in the bands, you can see that that's a 25 kind of move. You don't have to go that hard, that high if you're nervous about that much, but for sure if you're looking for about 2 or 3 times your profit target from your stop loss level, 25 last night would have been perfectly adequate. Okay, guys, great to talk with you again. Please leave comments or questions underneath the video, and I'll be happy to respond as promptly as possible. If you have not yet asked for your free Metatrader indicators, feel free to sign up, and don't spam people in email. So just happy to try to help if I can. Have a great day. Watch this volatility. Trade safe. And get lots of pips.